If you'd like to see more of our videos, please subscribe to our channel on YouTube. Good morning, traders. Welcome to today's market review. This is Razak at CMtrading. Today's March 30th, 2020, and today is Monday morning, so no economic news scheduled for today, but the markets are moving already. Now, looking at the currencies, we watch the US dollar continue to retreat versus the major pairs, although it looks like it's tapering off now. I'm going to take a look at a couple of options there. Now, looking at the indices, Dow Jones gap is down this morning, but rallies almost completely back. We're going to take a look at that. And looking at the commodities, gold gains while oil retreats to its lows at $20 a barrel. And lastly, looking at the stocks, the trading upwards with the index. Okay, they're still trading with the index. So I'm going to take a look at a couple of options there as well. But let's take a look at the markets and see what we can expect from today's trading. So we're going to start here with the Euro USD at a 4-hour chart. And you can see pretty much that we're just tapering off after hitting this 111, after making this V formation. Okay, not a complete V formation, but close enough to it. Now it looks like we're going to taper off here, okay, until there's further news that's going to take us in either direction. I think it's going to be a lighter trading day today going into this week. Now, looking at the GBP USD in a 4-hour chart, same story. Okay, a little bit more aggressive there than I would have thought it to be, but same story. It still hasn't made its complete turnaround to 130-ish level, so it is still weaker vis-a-vis the euro versus the US dollar as the GBP versus the US dollar. Now, jumping into the commodities, we're looking at gold here, just tapering off at 1616 after hitting a high of 1641. However, looking at the price of oil, $20.76 a barrel. Okay, this is at its lows. And we mentioned this last week that it was showing some weakness to it. And if it does break this $20, well, guess what? We could go to the $15 range. Okay, now I'm going to jump into ExxonMobil, okay, which is a stock, okay, that represents the oil companies. It's one of the largest oil companies. Now, this is a monthly chart. Okay, that takes us all the way back to 1997. Okay, now you could see that we're trading to those lows of 1997, and we hit 2001, 2002 as a stock market crash in 2001, 2002, and so we're hitting those lows. Okay, so we can't see in the future markets when we're looking at crude sweet oil to see the historic numbers because they don't represent, they just show you the futures market. However, when you're looking at the stock, you could see exactly vis-a-vis where we were trading back in those days. So needless to say, okay, what's the purpose of me showing this to you is that if we break further down, okay, from this price of oil from $20, then we could surely get into the teens and maybe even to single digits at some point if this continues. Okay, this is very concerning because it does have some ripple effects on the markets, especially the dollar. Now, jumping into the Dow Jones this morning, looking at a 4-hour chart, let's look at a 1-hour chart, a little bit clearer there. We saw that it gapped down this morning, a nice little gap down, and then filled the gap and went. And we're trading at this 21,600-ish level after hitting 21,700-ish level. Now, remember, we still have resistance here at 22,500. Let's see if we get back there. Okay, this may just taper off today. I don't expect the same volatility that we had last week. I expect it to diminish somewhat, okay, as we enter this week's session. Now, looking at the stocks, we're looking at Apple, which was kind of weak on Friday, okay? The market's kind of tanked towards the end of the day on Friday, but I would look for stocks like Microsoft to actually rebound today. Okay, I would expect it to get back to this 152, 155-ish level if the market sustains itself and remains strong. Okay, now all eyes are on the market still. Okay, it's still an index-driven market, which means that most of the sentiment on the market is how we're really feeling about the market. Okay, so as soon as we see some positive signs about the coronavirus being contained and being, the curve of the new cases that are being found will taper off, we'll see that the market's going to rebound slowly but surely. But until that happens, I think we'll be trading in much less volume, may taper off at a certain point, okay, and start selling off a little bit. But I don't expect the same volatility that we had last week, where we had 1,000-point moves in the Dow Jones. Okay, so just be aware of that. So, you might want to play it a little bit more aggressive, going into this week sometime on Tuesday, Wednesday. okay, as the markets pick up. Okay, for a Monday, we're relatively still quiet, okay, even though the Dow futures are gaining this morning. Okay, so just be responsible. You know, if you see that there's an opportunity, you might want to get a little bit bigger in it because, you know, the volatility is not going to be there as much as it was last week. This is Fred Razak. I want to wish everybody a great trading day.